Hello and welcome. I'm Suyash Maheshwari and you are watching Last Tick here on News 9, where we break down the day's action on the Lal Street. And Indian markets, they ended financial year 2024 on a high, with Nifty even testing record high levels during the intraday trade today. Now, if you've been following this show, you would know that we have repeated on several instances, pretty much like a broken record, like Nifty needs to break out of this range of 50 DMA on the downside and 20 DMA on the upside for a trending move. And that's exactly what happened today. Although, all of us should thank, probably the gods that bulls came out on top of this one. But look at how the today's session went by. Nifty was able to break past the 20-day moving average, which has been a resistance zone for the index in the past couple of weeks in the morning trade itself. And from there on, we saw an almost unilateral sort of a rally for the majority of the session. Around that afternoon, afternoon time, in the last half an hour, 45 minutes of trade, the markets did correct, and we saw a correction of about 200 points from record high levels. Sensex was also able to reclaim 74,000 in intraday trade today, and the index also came within touching distance of its record high levels, but it ultimately settled below it, up 0.9% or 655 points at 73,651 mark. Moving on to the broader markets, while they underperformed today, they are still on a 5-day winning run. I mean, look at the Fibonacci retracement level. The mid-cap index has now reclaimed 61.8% of the entire fall from the record high to the low hit during the March meltdown. Now, the index has also managed to reclaim 48,000 mark for the very first time in nearly 11 sessions. And although the small caps pretty much ended flat today, the recovery here, since mid-March has been equally impressive. Nifty small cap 100 is up almost 8.5% from the March 14 low, when the negative sentiment was at its peak. And if you look at the Fibonacci levels, it has retraced about 50% of its entire fall from record high of 16,691 to the March 13th low of 14,085 levels. But let's step back and look at how the fiscal went by, because it was a tremendous year for our markets. Nifty was able to surge about 27% in FY24 alone, and if you think that is impressive, the broader markets, look at the rally over there. The mid-cap index was able to surge almost 60%. The small-cap index did even better. It rallied nearly 70%. Let's move on to the sectors, because among sectoral indices, realty was a top performer with a surge of about 133%, followed by Nifty PSU Bank, which rallied almost 90%, and Nifty Auto, which delivered returns of about 76%. But all that is in the past. Come Monday, we will enter into a new financial year, FY25, and I mean, it's only customary that we do some crystal ball gazing around this time. And for that, joining us in the studio is a very special guest, Mr. Mohit Gang, co-founder and CEO at Moneyfront. Mohit, thank you for giving us time here on News 9. A very strong final session of trading for Indian markets. Nifty, I mean, for all essential purposes, was able to scale record high during intraday trade. We were just about 10 points shy of that mark. But of course, the last hour curves or the afternoon curves did set in, and we did see some correction in the last 45 minutes or so. But overall, a very strong session nonetheless. Heavyweight sectors like your banks and IT also participated in the upside, which by the way were laggard and have been laggard for the majority of the year. And also the breadth has finally moved back in favor of the bulls. What do you think led to this almost unilateral sort of a move today?
Thank you so much, Suyash, and what a year this has been. Like, terrific year for all of us, right? For every single investor out there on the street, it's been a year full of cheer and joy. Honestly, these are very rare throughout financial years, calendar years, when you see this kind of a unilateral rally across the segments of the market, right? Nifty almost around 30 odd percent returns in last 1 year. Nifty mid cap almost 56 odd percent returns. Nifty small cap terrific, like above 60, 62, 63 odd percent returns, right? And even if you see international markets, Suyash, if you see Nasdaq, it's given almost 43 odd percent returns, and S&P, right? People talk of the big tech names out there in US driving the rally, but even the S&P 500 index has given almost 31 odd percent return. So it's been a year, a fantastic year of returns all across. Not just in India, not just in US, but also in Far East like Japan, right?
Right.
Markets like Nikkei have broken record highs this year. So all in all, I would say a fantastic year across the globe for equity investors. Barring China, I think all of the major markets have actually pulled above their weight through the course of this year. Look, honestly, there is very little for investors to be disappointed. Obviously, you will have some sectors which will take the year through, and there will be some laggards at the end of the year. But in a nutshell, I think there is very little anyone can complain about in this year, Suyash.
All right, and of course, it has been tremendous year for equities, and still only two markets have been able to outperform us, US and Japan. Apart from that, India has been one of the best performing markets. And by the way, Mohit, it's on a 8-year winning run. We have not seen this sort of a bull run anywhere else. So clearly, you know, investors, investing gods, they are favoring Indian markets. And this year, especially, as you also pointed out, the story really was about the mid cap and the small cap space. And you know, when we entered March, we were seeing a bit of a shakeout, a bit of a meltdown taking place. But what a strong turnaround we have seen since mid-March. And although the recovery wasn't like the V-shaped recovery that we had witnessed in the past, but still, I think most of us probably were not expecting this sort of a turnaround. You know, when pretty much the negative sentiment was at its all-time peak, the regulators were talking about froth building up in the space. We were going through stress tests to actually, you know, understand how viable is it to hold certain stocks in the small cap space, and especially in the micro cap space in your portfolios. What's your sense of things now? Are the broader markets, are they out of the woods now?
Look, Suyash, honestly, on the valuation side, if you ask me, there is still a cause of concern on the larger universe of small and mid cap names, right? The froth which the regulator was hinting at, perhaps would have got cleaned out to a certain extent in some of the pockets, in some of the areas and sectors. But as you were rightly pointing out at the start of the show, that the retracement also has been equally fierce and very, very sharp, right? So I still think there are pockets and there are zones where the valuations are extremely crazy, honestly, to some extent absurd. Investors have to be cognizant of them, and they have to be aware about the risks and everything. In terms of all the stress tests and everything which regulator has done, my unilateral point has been that this is a step in the right direction. Any amount of information is always welcome. The more, the merrier, right? However, what next to be done in terms of these stress tests and everything, I think that also has to be very clearly spelled out by the regulator. So if there are certain schemes where there is a cause of concern, or if the regulator wants that the small cap and mid cap schemes has to operate in a particular framework or operate within a particular liquidity boundary, then those have to be clearly defined, right? Because it also depends on how the scheme has been running, what is the true to label, true to blue, true to label character of the scheme, so on and so forth. What is the aim of the scheme and other things. So those episodes will keep coming and keep going. But I think the resilience of the market has been noteworthy through the course of the year. And my sense is markets will give those smaller pockets of opportunities on and off. But honestly, the investors who will gain the most are the ones who remain patient and remain invested through the course.
All right, and you know, speaking of the valuations, clearly, you know, even though the recovery has been phenomenal, as you rightly pointed out, the valuations are still uncomfortable as far as the broader markets go. And sir, you are a registered investment advisor. I mean, how should one approach stock picking in the mid cap and the small cap space? Should one look at it, you know, should one have a top down sort of an approach where you first select sectors you want to bet on and then pick stocks which are undervalued, or would you rather prefer a bottom up approach where you pick companies, you know, look at their management, look at their earnings first, and then probably build up from there on?
Look, it's very difficult, Suyash, honestly, to be following a one typical strategy, whether a top-down or a bottoms-up kind of a thing. I'm mostly a believer of the camp that if you are a little confused on either ends of the curve, then you go with the index, right? You go with the broad-based index and just stay invested in the index. Now there are multiple parameters of stock selection within an index, and depends on what is your trading philosophy or investment philosophy, and you have to go with that. You could be a value investor, you could be a momentum investor, or you could be a pure play quality investor. And on each parameters, the stock picking will differ hugely, right? And within every sector, you will find some opportunities, some spaces. My whole theorem goes like this. Firstly, I would look at the macro, the overall macro scenario, which is the overall global scenario, the rate regime, and all those things. I think that is looking extremely comfortable. Then you pick up sectors which are likely to benefit the most in the coming year, right? And there you have to see some bit of politics, some bit of macro, some bit of domestic theorems which are floating around, right? So if you are betting heavily on the election outcome in a particular direction, then you would know that government will put additional focus and additional measures on certain sectors. Then you go deep searching in those sectors, right? So it could be infra, it could be water, it could be solar, it could be renewables, and those kind of sectors, or it could be EVs, it could be autos, right? So you go into those sectors and then figure out whether you're finding real value somewhere. It's very difficult to actually find good value, honestly, in these kind of markets. So you have to go with stocks which are showing reasonable growth, reasonable momentum, and then pick up your bets from those sectors.
All right, that's the word coming in from Mohit. But Mohit, stay with us. It's time for us to slip into a short break. But you out there, stay with us. We have lots to discuss with Mohit on the other side.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win. Life of a goalkeeper is something which has always intrigued me. When you come into a stadium, this is the highest level of pressure. When I set out to do something, I decide in my mind that failure is not an option.
What you feel very strongly about, those are the stories to tell.
I have a mind which is absolutely restless. Mind and body are entangled sensations. That brings me back to golf. It's an amazing game.
This is not a perfect game. You only learn from them.
If you have a formula to a success, then you can replicate it.
I feel this is my first step. I'm starting now.
Winner is first born in the mind. I think, therefore I am. We are all about our mind.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Welcome back. You're watching first last tick here on News 9, and this is a very special moment for us. We are wrapping up financial year 2024. Come Monday, we will enter into a new financial year, FY25, and we have spoken about the headliners. We have spoken about the broader markets at large. Now let's look at some of the best performing sectors of FY 2024. Nifty Realty, I mean, phenomenal set of returns, 133%. I mean, it's been a multi-bagger story for for the investors out there. PSU banks has been another top performing sector for the markets. Auto is another one, and I mean, look at pharma and metal as well. They have also delivered 50% or so returns. No, Mohit, coming to you, I mean, brilliant performance from your realty stocks, PSU stocks, auto stocks. Do you expect any of these three sectors, can they repeat their performance in FY25?
So realty, auto, and the one you said was PSU, right?
PSU banks.
Okay. Look, honestly, whenever equity markets do very well, I have always seen that reality as a sector picks up with a lag, right? It picks up after 6 months or after a year of a great equity rally. and which typically is what is happening in the markets right now. Honestly, but I don't know how long will this last. But people tend to, or HNI investors tend to book profits from equities and move it to physical assets, and which is where reality gains the most. And we have seen huge amount of demand on the residential side in all the big metros, and even the commercial side has been picking up after the work from home environment has gone out of the window. So my sense is Nifty reality should continue to do well for the first half of the year, but I'm really not sure whether it will persist and sustain for the full financial year going forward. I'm a little more bullish on the other two sectors, which is the PSU bank and the auto. Not per se PSU banks, but I'm bullish on the entire banking space on the whole put together, right? So for me, I think the categorization between PSU and private is very difficult to make for the next financial year. As of now, I'm not very clear in my mind as to which one will outperform the other. But my sense is the private banking space also has been lagging a lot, and it's just a singular rally in PSU stocks, PSU banks, which we have seen. And my sense is the private sector peers should catch up now. We will see a good private capex cycle picking up in the country, hopefully post the elections, which is what everyone is hoping for and waiting for, because we haven't seen too much of private sector capex happening in the country for last few years. It's only been government capex, right? And I think with the private sector capex picking up, private sector banks have to come into play in a large way. Even PSU banks will come into play. Even on the valuation side, if you compare, most of the PSU peers are still quoting at a very nice, comfortable valuations as compared to their private peers. So I think there is some headroom out there with the cleanup which has happened in those banks, the NPA story and everything. I think it's looking very good on that space. Nifty Auto has been a great pack, and auto story in India has been a fantastic dream story. Honestly, I think. If I'm not wrong, we will sell almost 42 million passenger vehicles in the country. India will become the third largest country in the world in terms of passenger vehicle sales after US, China, and there'll be India. India will overtake Japan this year. And the story looks extremely robust. The demand, the appetite for having a four-wheeler is phenomenal. Even on the two-wheeler space, the EV space is kind of creating a lot of waves. But the valuations out there are extremely rich and crazy to my mind, honestly. But yeah, on the passenger vehicle segment, I think I'm fairly bullish, even on the commercial vehicle segment. So these are two spaces, which is the overall banking space, not just the PSU bank, but and the auto space. I continue to remain bullish.
All right, you're bullish on auto, and you also pointed out that there is clearly a stark contract as far as stock performances of the private banking private banks and the PSU banks are concerned. But Mohit, circling back to realty stocks, we are also seeing a stark contrast in what's going on in the housing market in India versus the rest of the world. I mean, our housing market sales are growing in double digits on a quarter-on-quarter basis. Prices, surging even more swiftly, whereas elsewhere, housing market is pretty much in doldrums. Considering we are in a high interest rate regime, what explains this stark contrast, sir?
I think, yeah, that's a fair point, Suresh. In a high interest rate regime, which has lasted for a fair bit of time, to see this kind of demand, I think it's surprising to many. But my sense is it is more the equity market money which is flowing into the housing market. Plus, the affordability part has been increasing across the middle income category in the country. The middle income segment per se has been widening in India for a fair bit of time. And I think I was reading some study which said that the middle income consumption alone by 2040, India and China will account for over 50% of middle income consumption globally. So this middle income segment in India has been rising, and I think the demand or the appetite for having one's own home or residential property has always been in this country, right? That's been the biggest dream of many Indians. And I think that affordability part, the wage increments which have happened overall, not just in private segment, but in the government sector, if you see, Suyash, the increments have been fairly robust, right? So my sense is that entire equity rally plus the affordability part in combination has been fueling this reality thing. And also the back was beaten down for almost a decade. So there was a lot of intrinsic value. They were quoting extremely cheap some of those reality names, and I think it was one story which was bound to happen possibly, but no one could have predicted this kind of trend.
All right, but moving on, we have spoken about the wealth creators. Now let's talk about the underperformers. Media, private banks and FMCG, I mean, their respective indices did not perform as well. But, you know, considering the kind of 18% returns on FMCG and 16-17% returns on private, sector stocks, it's really, I mean, we are drawing a, we are skating on a thin ice when we are calling them underperformers. But considering that they have not done much over the course of the year, at least they have underperformed the broader market at large. Anything between the three that looks attractive to you at current valuations?
Look, Suresh, honestly, I think you said it right. It's a travesty that we have to call these sectors underperformers just because they're given whatever 18, 14, 15% odd return. However, calling IT an underperformer with a 22% odd returns, I'm not sure in which other country would you do that. But yeah, that's been the crazy story of Indian capital markets, honestly. Look, if you ask me out of this entire pack, I like the IT pack. I've been vocal on that on your show itself for a fairly long while. That with the rate cycle turning globally, it's just that intermittent uncertainty came into the rate reversal cycle for last 3 odd months or perhaps last 6 odd months, that we weren't very sure when the Fed is about to go on the rate reduction cycle. My sense is we are quite close to that phenomena. We are quite close to the cycle reversing. And tonight we will have the PCE data which will come out. Hopefully that will give us even more indications on whether we can anticipate a rate reduction effective June onwards from the Fed. And if that starts happening, my sense is IT pack will rule. I would still say it's 6 months, perhaps wait and watch kind of scenario for the IT pack. But I think the second half of FY25, I would be extremely bullish on IT pack, and perhaps a little early, be a quarter early if the rate cycle reduction or the rate cycle starts reversing earlier, right? And obviously the results from the Indian bellwethers, I think Accenture result played a spoiled spot out there, but Infosys, TCS results will be a big and even Tech Mahindra to some extent will be a big thing for me to watch out in the month of April. I think if all goes well out there, then perhaps that is a pack to watch out for. Private bank, I said just now that I'm extremely bullish on that pack, and my sense is private bank will definitely lead the market this year, honestly. Within media, I'm really not very sure. Honestly, it's very difficult for me to distinguish a right company from the wrong one, or a good richly valued company from the other one on that one. I'm not very keen on the media pack per se, barring one or two names which you can perhaps figure out that there are some stories out there. Right, but otherwise, if you ask me to name the pack as a whole, I would not go for the media pack. FMCG, look, I think the valuations are extremely rich, honestly. The ROEs and ROCs are very, very good. Great companies, great managements, great setups all across. But the growth rates have been very, underwhelming for the entire pack, right? And the rural demand has not picked up in the country. The rural space is not kicked up. My sense is the election spending will give us a good indicator of whether the rural demand is picking up. That will be followed by monsoons. If I think these two stories go out well, so you have the IPLs getting played out, which will anyways drive some consumption, though largely urban, not rural. And then you will have the elections simultaneously, which has always historically driven a lot of consumption across the country, especially rural consumption. And then you will have the monsoon. So all these three triggers, once they are played out, we will have a very good indication of the FMCG pack. My sense is there are some beautiful names out there looking extremely good and attractive, but I think there will be more a stock picking game than the entire sector working as a so that's my take on these names.
All right, Mohit is bullish on IT and private banks, media not so much. FMCG, I mean, we need some answers over there. Rural demands needs to pick up, and we also need to see how the monsoon goes. But Mohit, before we let you go, I mean, let's do some crystal ball gazing. It's just customary around this time. Where do you think Nifty will end FY25 at? I mean, is 25,000 possible? We are just about, what, 11-12 points away from it? Sounds doable?
FY25 you're saying?
Yes, 25,000 at FY25, 25,000.
Suresh, don't hold me on to those things. Honestly, I'll go with a much more calculated answer, and I think around 12 to 15% is still doable, even on a higher base and even on a massive rally like this thing. So I would not rule out a 15% return even for the next FY.
All right, Mohit, that will get us to 25,000. By the way, we are just about 11-12 points shy from that 25,000 mark. Sounds like a good number, and to end FY25 at 25,000, that would certainly be something. But one final question for me: can you give us a 2-3 maybe stock picks for FY25? What's looking attractive to you across all segments, large caps, mid caps, and small caps, sir?
Okay. Look, so on the private banking space, honestly, we like ICICI Bank a lot. I think that's one stock which has been doing phenomenally well also, and my sense is that will continue. The differentiation between ICICI and HDFC has been increasing for a while, and my sense is that will continue to some extent. On the PSU banking space, SBI is one stock, again a very large cap name, but I think SBI is one stock to watch out for with a good 2-3 year view, not just 1 year view, but with a good 2-3 year view. Right. On the auto pack, we continue to remain bullish on Tata Motors. I think there's a lot which is happening out there with the segregation of business between passenger vehicle and the commercial vehicle segments, and few other managerial changes and few other restructuring which they're trying to do. I think Tata Motors continues to remain a good pick per se. On the IT pack, look at on the overall pack also, as I told you, quite interested in the full pack per se, but if you ask me, the mid cap pack is also looking very attractive. Some names from a very long term perspective, let's say a Coforge or a Persistent, are good names to hold in a long term portfolio of any investor. You will go through some corrections. Coforge for some time has been consolidating, but my sense is it's a good pick for a long term investor out there. Right, and on the large cap IT again, TCS would remain a slightly more favored pick. Similarly, you can go somewhere down the chain on few of those, let's say, water names per se. I think that is one area of focus for the new government. And out there, you have some, as you asked, mid and small cap names. There are some companies which are, let's say, on the water EPC contract companies or water treatment companies or water purifying companies. You have names like the Ion Exchange, or you have Wellspun, which is more a pipe manufacturing company, and those kind of companies. And then you have some names in renewables which are looking very attractive. Again, valuation wise, each individual will have to see. Honestly, these are not cheaper names at any point in time. But yeah, I think because the focus of the government continues to be there, and if we have a theorem that we will have a stable mandate going forward, then perhaps these are few sectors which will look good. And there are few names in defense also like this.
Right. All right. Apologies, Mohit, for putting you on the spot. But all those who follow Mohit, he has put forth a good list of investment opportunities that you can look for for FY25. Mohit, appreciate your time, appreciate your thoughts. Thank you for joining us here on News 9, and we'll see you on the other side in FY25.
Thank you so much, Yash. Thank you.
But with that, it's a wrap on this edition of Classic. Thank you for watching.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win. Life of